Hello and welcome to today's edition of Charting the Markets. With me, Sean Murison, Senior Market Analyst at IG South Africa. Today's economic calendar is quite light. We do have that weekly unemployment claims data out of the US, probably the only real one to note that is scheduled. And markets are generally consolidating after what has been quite a decent-sized rally from that post-debt ceiling suspension. Let's look at some charts, and starting off with the dollar index. As we were saying that, in a news light week and after that rally, we are seeing markets consolidating, and that is what the Dixie or the dollar index is doing right now. It broke that 103.15 level, reached that next resistance level, just short of that 104.35, and now it is consolidating between those levels. I think for short-term direction, you want to see a break of either that support 103.15 or a move above that 104.35 for short-term direction. Now, that longer-term trend is still considered down. We see the price trading below that 200-day simple moving average. So I think if you are looking to trade with that trend, a break of that 103.15 mark, might consider that bearish reversal downside break and start looking for a move back towards that 102 level. In the event of an upside break, I think preference there is to wait out strength, see how far it takes us, and look for a bearish reversal maybe at a higher level. If we move above that 200-day simple moving average, it is a start to suggest that longer-term downtrend is starting to break. And it doesn't necessarily moving into a new uptrend. It would mean that we could be just broadening moving into a longer-term sideways range-bound price environment. I think where we start to consider the emergence of a new uptrend is we do get above that 105.30 mark on the dollar index. Euro dollar, inverse picture here. We've had that longer term uptrend, which is still in place. The price is above that 200-day simple moving average, the blue line on our chart. We did break this trend line a little while ago, but I still think we haven't made new major lows yet. So I still consider this move lower to be a short-term correction of that longer-term uptrend that is in place. We had close to a confluence of support here, about this 106.85 level, and then that 200-day simple moving average, the blue line on our chart. We're looking for a reversal. It is starting to reverse off this level. We'll see a bit of a stronger close, maybe above the high of that preceding candle before we start targeting some higher levels, maybe 1.0776. And if we get through that, maybe 1.0855. Now, again, similar picture. If we do this reversal doesn't play out and we don't actually confirm it and we see a break of support and move below that 200-day simple moving average, suggesting that a longer-term uptrend would be broken now, but not necessarily indication that we're in a new downtrend. Just when we have that break, we'd be trading between the levels and consider longs and shorts in the market. And obviously in the break there, we're looking for a bullish reversal closer to that 1.0513 mark for long entry on that. And a move below that instead, then we might consider that longer term trend to be changing direction. But for now, longer term trend is still up. It is starting to be tested though in the short term. Similar picture on cable, where we have this price that is we started to correct, moved into a bit of a consolidation. We are still quite far away from that 200-day simple moving average, but we're certainly trading between levels here, that 1.2343 and 1.2543 mark at this point in time. We are trading more or less in the middle of that range, so it's a bit of a tricky one here, but we are still keeping a long bias to trades on cable at this point, in line with that longer-term uptrend. Traders might look for a bullish reversal of support here or a break of resistance as possible triggers for those long positions. Moving over to some indices now and starting off with the NASDAQ 100. US Tech, as it's labeled on our platform. Now we've had a strong rally. We've actually seen that rally start to accelerate. That longer term trend is up, price firmly above that 200-day simple moving average. Again, but in the short term, we have started a bit of a correction. So we have a bearish candlestick pattern here, this big red candle here engulfing that preceding candle. Put those candles together, it's also a bit of an evening star type formation and from overbought territory. So we have a bearish price reversal supported by an overbought signal, suggesting possible short-term weakness to come. Now, preference, if you are a trend follower, might be to wait for weakness to play out, see where the price settles before looking for long entry, rather than trying to trade that move lower. It's obviously the opportunity. Trading against a trend for profitability is much smaller. You have to be quite quick and nimble in that market. So we are waiting for weakness to play out, looking at where the price finds support, and provided we're still trading firmly above that 200-day simple moving average, would be looking for long entry into any type of short-term weakness. S&P 500. Similar picture where we see the uptrend in place. We've seen a bit of an acceleration there, and we are now looking overbought. We don't have as sharp a reversal. Obviously, seen a bit of a pullback in tech over the last day or so, which is partially influenced in the S&P 500, but not as material as it would be for the NASDAQ 100. So you could say there's a bit of a consolidation, some pause in this move higher. Our preference remains the same. We'd be looking for a pullback from overbought territory and see where that price settles, looking for long entry on the S&P 500. Germany 40, or the DAX 40, sitting in a consolidation. So we recently hit new high territory here, pulled back, and now we are moving in a the candles, they are very small bodied candles showing a bit of non-directional intent right now. That range we'd consider in the very short term between 15,715 and 16,100. Longer term trend is still up, so preference there is look for a reversal off the trend line support of this 15,715 level, or alternatively a break or a close above that 16,100 level before targeting a relatively close level of resistance here at 16,330. So ideally, in a perfect world, I'd like to see a pullback towards a support and reversal off of there. We've still got quite a bit to go before we consider this longer term trend to be down. Bear in mind that we have recently hit new all-time highs. FTSE 100. Longer term trend is a sideways trend, sort of a bit of an underperformance relative to the other indices we've just looked at, but certainly it is looking at trading between the levels. We've had a break of the 7,560 level, and we had a bit of a strong push there. So we're hoping to see a move back up towards that 7,700 mark. I think if you are looking for that long and for the move towards that target, having a stop loss below that 7,560 level might be a consideration for that trade. All right, let's look at some commodities now. There's been quite a lot of movement in oil over the last little bit. Now looking at Brent crude, last time we looked at this chart, we were talking about this rising wedge. We're saying that is a suggestion that short-term downtrend, as a function of this move down, was looking to continue with support here at 72.20 being the initial target. That did actually happen. We had quite a strong break and it tested that level before it rebounded quite sharply off the level. Found resistance again here to this wedge resistance and then started to tumble again. Now, longer term trend bias remains down as the price is still firmly below that 200-day simple moving average. Again, the blue line on our chart. We are looking for, we do think that this bit of the pullback has ended now. When you see this long wicked candle here, this red candle being a hammer type formation, we'll zoom in a little bit here. And then we have the next candle which engulfs. So it suggests that this little leg down has now come to a short-term end. We are bouncing. So we are not looking at getting long on that. We are preferring to keep a short bias to trades on Brent crude in line with that trend. So we'd like to see either close below the lower bodies of these candles here, suggesting that there's some momentum back to the downside before targeting 72.20. Or alternatively, if we do carry on rebounding from current levels, we'll be looking at a bearish reversal signal from either this wedge resistance level or this horizontal level for short entry once again. Only when we start trading above this 200-day simple moving average would we reconsider our trend bias, which we still consider to be down for Brent crude. Now gold. Gold is testing support. In the short term, we are trading in a range between 1945, maybe 1940, you would take, to 1980. That seems to be quite material at this point. The price has spent a little bit of time between those levels. Longer term bias is still to the upside. Price is still trading firmly above that 200-day simple moving average. We're watching this level quite closely. We think this channel support has now been broken as the price moves in that sideways consolidatory fashion. But certainly any type of rebound off here targets 1980. If we can get a close above that, we start looking at the higher levels, 2005 and $2,050 per ounce. In the event of a downside break or close below this level, we do start looking to the lower levels here, supported 11855. You could probably add in a level a little bit higher than that, probably some confluence with that 200-day simple moving edge, about 1875. In that situation, we still wouldn't be looking at getting short just yet on gold because of that longer term trend, but we're waiting to see the price settle, looking for a bullish reversal and looking for long entry on that. Only start to reconsider if we do start trading below these levels, the 200-day simple moving average and then 1855 level. Last but not least, Iron ore has shown us something a little bit interesting here. So when the price is trading below that, whipsawing back and forth through a 200-day simple moving average, we consider that longer-term trend to be the sideways in nature, which is what's happening right now. But over the short to medium term, we've had this downtrend, and then we've had now the price form this double bottom type shape, this W shape below the 740 mark, and we've broken above that resistance, and now we are trading above that 200-day simple moving average again. So that's the suggestion that the short to medium term correction will move lower, has reversed, and we could be moving into a new upward move. I think when you're trading a pattern like this, maybe looking for a bit of a pullback before targeting that $795 per metric ton. This is Dalian iron ore, by the way. And then, but sometimes you don't get the pullback, and sometimes you just get the momentum. But at this point in time, $795 is the upside target from that move. And iron ore, while not heavily traded, is really, really material for a lot of the iron ore diversified miners, including BHP Group, Anglo American, just to name a few. Right, that's all the charts from me. I'm Sean Murison, Senior Market Analyst at IG South Africa. Do watch out for this afternoon's weekly unemployment claims data out of the US.